Good day, traders. Welcome to another weekly market updates from the K5 Trading. Today, we will discuss how we're expecting the major currency pairs and index to react next week based on the historical data and our technical strategies. We normally use two types of technical strategies. One is based on our day trading model, and the second one is institutional trading zones, ITZ, what we call it. In today's video, we will also give you a preview of Caloundra Intelli assistants, which help us to identify those day trading model trades and the institutional trade zones on the chart. So it's not on the chart. Basically, it's in a scanner. A scanner will scan multiple time frames and the multiple symbol at any single time. So you don't need to do sit for a long time in front of the computer, and just simply they will give you the alerts based on when those zones are developed. If you like the contents of our video, please subscribe to our channel, like it, and share it among your friends and the fellow traders. Please note that the discussion or the analysis or presentation what we are showing here, they are only our point of view, and by no means it's a buying or the selling recommendation. We have received many requests to increase the frequency of the videos and the trade setup. Soon we will start giving the market updates twice a week. Until we can start that one, you can join our Discord server, where we provide regular updates 2 or 3 times a week on the major market setups. You can also join our you can also join us on the Facebook page by just going and liking the Facebook, which is facebook.com/K5Trading, and you can subscribe to our channel on the YouTube as well. With all those initial stuff out of the way, now let's move to the analysis. We start our analysis from the S&P 500. Why are we starting from the S&P 500? Because the S&P 500 and the Dow Jones Industrial Average, which is US30, did try to push very, very hard last week and try to break the cycle of the bearish movement. However, what we can see that they still in kind of a sideways range-bound market, rather than we can say, yes, the market has actually reach the bottom. We cannot say until it actually give us a confirmation signal that it is willing to go up. Until that time, all those rallies, small rallies, we consider as a correction. And when we consider them as a correction, that means that we are looking to short on those markets when they reach a certain level. So a potential zone where we are expecting market to retrace in coming weeks or try to give us a reaction is around 4,200 or 4,300. Between these zones, we are expecting market to give us some kind of a reaction for a bearish trade setup. However, based on the yesterday's or last week, the breakout, what we can see, the market did try to break the high of this bar, which was set on the 19th of the September, but it failed to break it. It failed to break it. It just kind of making an equal high type environment. So what does it mean? That's equal high here. That's next week. We can see some kind of short trades, bullish setup coming down, and lots of liquidities here, which give us a confirmation that once this down move, if the down move doesn't reach this low, which is the 3,500, then I'm expecting market to give a small retrace, clear this liquidity, went into this zone, and then come down for the bearish move. When we expecting market to be a bullish, we only expect market to be bullish when it's break this zone and give us a closing above the zone. Then we will say, yes, it looks like market trying to give us a breakout, but we will wait a confirmation from them. And there is a time on the weekly time frame, especially, I don't see any confirmation for the upside move coming in this year. So maybe it may take up to early next year when we see a confirmation if the market want to move higher. So that's the ES or S&P 500. Now let's move to the AUDUSD. The Australian dollar on the weekly time frame, what we are expecting is we still expecting market to come below up to the 60 cents or 59 cents. And why we are talking about this zone all the time for last 1 month is very, very clear, simple reason for this one. I'm expecting a zone which is around this area. Okay, but before I can draw the zone, I want to zoom out and show you why I'm talking about even that. Okay, this is my monthly time frame. And right up here on the October 2008, the market made this low, which was 59.8 something, or 59 area, and this zone, and that's where I'm actually drawing my zone. So if I can draw out my zone based on this area right up here, and then just reduce this one a little bit, this closing, and maybe a little bit up here. So that's the zone which I'm expecting market to come and give us another a reaction or a kind of confirmation that market is reached its bottom and now it's ready to move upside. That was the monthly time frame. Now let's move to the weekly again. And on the weekly time frame, what market did? Market did try to break this previous months, or that's October, early October's breakout, like the 4 weeks highs breakout, but it's actually failed to break this one. And then it tried too hard, and I think in the last couple of days, market actually have a lots of selling, and it's given the closing in the middle, but just slightly above the previous week. So I'm expecting market to give some bearishness. I can see some bearishness in the next week, and I'm expecting market to actually start a bearish move and then try to break out again in this area, come into this gap, and then I will be shorting this market. So this is one of my confirmed trade. I'm just talking about that. Once the market move into this zone, I will be actually shorting this market for the prices to come down around 59 cents. So that's my view on the Australian dollar. After Australian dollar, let's have a look into the euro. Okay, on the euro, I have already drawn some of those zones, and that's on the weekly time frame. Market did actually for last 1, 2, 3, 4 weeks. It did try to break some of the previous highs, but eventually this one didn't manage, this one didn't, and this one did try to close above the 4 weeks back high, and it failed. So it's failed in a way that's market pushed upside, but then lots of selling and closing in the middle of the week, middle of the bar, but failed to give us a closing above the 4 weeks or October or start of the month's high. And that is a significant, that's market is still trying to, is still struggling to give us the upside trend. But however, for last 3 weeks, I can see that the lows are lifting. When the lows are lifting, closing in the middle or upside, that's a positive sign that market will give us some kind of move, which can start a kind of a rally. So, but but these are my zones where I'm expecting market to give us a reaction. So that's the first one, and this is the second one. So let's see how the market plays next week, but expect a bullishness in the Euro USD next week. It's when that US dollar is going to be a weaker. Then why we say that the Australian dollar is going to weaker? If the US is going to be a weaker against the euro, doesn't mean that the US dollar is actually weaker, but it means that the euro is getting stronger. So let's see how the market plays. But because of this, the closing in the middle, it's giving us some kind of indication that market may try to come a little bit bearish to start with, but then after that, I'm expecting market to push in this zone. Okay, after the Euro USD, now we go to the US30 and see how the US30 will play out. US30 is exactly the same story as the S&P 500, except the one change. That's US30 did manage to break this start of this September's move, September high. So it did manage to break this one and give us a closing just at the edge of the high. So I'm still expecting, and its market is actually touching this zone. So I'm expecting some kind of reaction here and a bearishness of the market to come down next week. So I'm expecting YM, or the Dow Jones Industrial Average, or US30 is going to give us a bearish move next week. That's all I have for this week about from the chart point of view. Now let me show you my scanner, Caloundra Intelli scanner, and this is what the scanner looks like. Here we got 3 different strategies, or actually 4 different strategies. We got a breakout and breakdown of the previous day's high and previous day's lows. We are using a lot this particular trade setup in our daily trading and on our day trading model. And that's give us some kind of trade setup when they are actually ready. And if you go to any charts, on those charts, you will be able to identify those trade setup by yourself. But what the Intelli scanner will do is, our Intelli assistant will do it. It's actually scan the market for you and all of the time frame, and give you the alert when the trade is ready. So, for example, mostly the way we trade day trading model, we will have a different video on this on how we trade on day trading model. But what is mean by this breakout and breakdown? So if it's a green color, that means it's a breakout, and the red color, that's mean it's a breakdown. That's number of the bars ago. When you see some numbers here, that's mean that's on 75, and that trade was actually give alert for the setup 64 bars ago. So, but it's too late now anyway, but this is how it's works. LS and LSR, that's the long and short within the zone of the day trading model, like previous day's high and previous day's lows. When the market doesn't break out or break down, it's trade within a zone, and this is related to those ones. And it's those numbers give us like how many bars ago this setup was created, and LSR means that how many bars ago the created setup being triggered. So triggered the alert. Then becoming the industrial trading zone, which we call point of interest. The point of interest is our bread and butter type of the trade setup. It's give us a scanning of the entire market on every single time frame which we choose here. One of the example which I can give you up here is Australian Canadian dollar on M5 time frame. So let's open a chart for Australian and Canadian dollar. On this Australian Canadian dollar, if you go to the M5 time frame, and what we're going to do, we're going to have an indicator which automatically put those setup into the scanner. What we can see on the scanner, they will put on the chart as well. But let's at the moment we do just the manual. It's Australian Canadian dollar 87286. So if I can go here and draw a line, and I can say 87286. So all I need to do is 286, and that's my zone, right? My zone is just this candle. The market breaks previous low, and in this leg, this is my zone, and the current price is just right up here, and that says up here that's 41 points away from the creation of the zone. And if you look at the scanner, this is what it says, 41, 44, whatever. So this is the number of the points away, the current price is away, that many points from the point of interest. So we can set up alerts on those ones, and we can say, okay, when the current price is X number of the points away from the point of interest, please give me an alert on my email or my mobile phone, and they will actually push through the push notification. They will send you those alerts. You don't have to scan the market every single day or every time, like to go through each of those charts and each of those time frames. The beauty of the scanner is that it will do all your the hard work and give you only the setup which are the potential setup. Another one we got here is a matrix, and the matrix bars away. So the matrix is our Fibonacci based trading strategy. This is a different number we use, and these are the one, like for example, 6 bars ago, it's actually touched the Fibonacci 50 points. That's Australian Canadian dollar again. So let's go to the which time frame is in 1 hour. So if you go to the 1 hour, it's here, and I believe it's using this area, or maybe this area from here onward up here. Yeah, and 50%, no, I think it's using a different area. Maybe it's using this one. Okay, yeah. Okay, so it says 6 bars ago, 1, 2, 3, 4, 5, 6 bars ago, it has touched the 50% zone, and that's what it is actually showing here. So this is the drawing of those lines of the Fibonacci's. They are based on our special calculation, which try to work out the potential or optimal swing high or swing lows, and it's just draw between those ones. So that's a very, very good trade setup. We normally follow. Very, very good calculation based on the Fibonacci if you are looking for the golden zone or some kind of the OTE type trade setup. So folks, that's all I have for you today, and next week hopefully our scanner will be ready and we will start looking our trade setup from the scanner. So until then, happy trading. Thanks for the watching.